It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, November 19th, 2015. Wrapping up this third week of the 11th month of 2015. Don't forget, no newsletter on Friday evening. Next newsletter for me will be on Monday evening. And don't forget, next week is a short week. We've got the Thanksgiving holiday coming right around the corner. We'll talk more about that Monday, Tuesday next week. We, of course, have a plan for you in tonight's newsletter, and we do have a doozy in store for you guys and gals tonight. That's right, they still have doozies these days. Kids, hope you're paying attention at home. Crude oil is range bound and rotating higher today off the lows of the range. We told you they had a shot to go back to those lows, and they definitely took it just before the U.S. session got off to the races this morning. So we're rotating higher on crude, up off those lows of the range, which gives the absolute edge to the bulls tomorrow with a target up around 42.77. You know this crude's not going to make it that easy on us. Looking for some fake breaks to the downside for the buyers on crude on the way up. We get a plan for the black gold. How about the S&P 500? S&P's range bound, bearish this evening. Bearish after 2 days of strong buying. Got to watch real closely on this chart. That means we're waiting for more information tomorrow morning to see who takes control. Bottom line on the S&P tonight, we've got 2 strong days of bullish moves in, and now we have a bearish bias going into tomorrow. I got a really detailed plan for all the E-mini traders tomorrow. Make sure you stay tuned for that. How about gold? The yellow metal, range bound with a bullish bias this evening after we saw a spike in channels send this price higher this afternoon. Now, on gold, we should see buyers rotate price higher overnight. But if they don't reach that 1086 high, then we expect price to make a run back at the beginning of that spike in channel. This could be interesting on the yellow metal tomorrow. And the euro looks very similar. The euro, the 6E currency future, is also range bound with a bullish bias, just like its friend the yellow metal, along with an interesting bull channel that gives us some easy clues as to where the smart buyers will likely be looking for the best opportunities tomorrow on the euro. If you're trading euro, gold, S&P, or crude oil, we got a plan for you guys here on a Friday morning. Don't forget, though, before we jump into our charts and our strategies for tomorrow, I do want to remind you, make sure you're watching this video on our trading blog here at Sideways Markets. If you're watching the video on our YouTube channel, don't forget to follow the link in the description of the video. Make sure you read that disclaimer in that description as well. And head on over here to Sideways Markets. Couple reasons why. First of all, upper left-hand corner, I would love to invite you to come join me in my trade room as a brand new member for a day. Right? I got a free pass for you guys. Come in, slip in the back door of our trade room, and take a look at how we do things here at School of Trade. Grab your free pass in the upper left-hand corner to say. It's almost Friday, I know. Lower left-hand corner, right above my ugly mug, you'll see a spot to register to join our nightly newsletter mailing list. Now, all I need is your name, your email, and then make sure you verify that inbox, and I'll send you an email every evening when that newsletter goes live. Right below the video tonight, you can download all the charts you see me using in tonight's video. Follow that link below. And then over on the right-hand side, you'll see a spot to register as a trial member, not to be confused with the free pass, much different. And of course, you can learn more about what it means to be a member, hear from real member reviews, and of course, don't forget, we've always got someone standing by 24/7, 365 to answer all your questions. Don't forget, no question too big or too small. Don't forget to reach out for help if you need anything along the way. All right, guys, tomorrow is a Friday trading session. We don't have much on the calendar. We get a Fed speaker early in the morning. Tomorrow is options expiration Friday. These days, we don't typically see much more than a hiccup on that. There might be a little bit lower volume than kind of the average Friday tomorrow on the E-minis and the currencies, but gold and crude oil should not be affected too dramatically by tomorrow, Friday, November 20th, right? Options will expire every 3 weeks, right? The third Friday of the month, and that will be tomorrow, right? So be aware, tomorrow's a Friday. Fridays are always early in, early out. Right? We don't trade the afternoons on Friday. So get to them early tomorrow, right? You don't want to be stuck holding the bag after 11 a.m. Eastern time on a Friday morning. Don't forget, we open up our live trade room tomorrow morning at 8 a.m. Eastern time, and we'll be doing all this stuff in real time with all of our advanced members at School of Trade. Let's get started. Crude oil. Oh, boy, there's that range again. Tag, you're it. Tag, you're it. Tag, you're it. range rotation, 2-try rule, focus on failures. Boy, oh boy, oh boy. Close is not close enough in the day trading game. We talk about that all the time in our classroom sessions with our students at School of Trade. We talked about this last night. Definite range on crude right now. This is the same exact chart from last night. I spruced it up a little bit. We added a wedge on here, but this is the same chart from last night. Made my job pretty easy today. We have rotation, tag, you're it, up to the high, down to the low, tag, you're it, run it up, right? Double try from the buyers, tag, you're it. They fail. They rotate it all the way down. And remember we talked about last night, right? This was the area last night we talked about. They actually missed that low. If you look closely, the low is at 27. That got to 28. Unfinished business. Remember we talked about that last night? So we knew that we were trying to get that rotation higher, but we said, well, don't be surprised if by the time we come in tomorrow morning, they've run it all the way down, just kind of put that nail in the coffin to finish the job off at 27. Now, tag, you're it. And we're looking for rotation back up to that 42.77. What a great learning opportunity on this. Just fantastic. The rotation from low to high, high to low, low to high, high all the way down to the low. There are two things that you learned on this. One, range rotation, right? Tag, you're it. The second thing is close is not close enough. Oh, and probably the third thing, you've got to know where that trading range was, right? How did we know where 41.27 was? I'll give you a hint. It's the best fit. It's the best fit. And we teach all of that to our students in our intermediate course here at School of Trade, right? Trading ranges. So we know that we go 41.27. And now, as you can see here, looks like we have a bit of a bearish wedge on the chart right now. But, no matter how you slice it right now, that wedge is ready to ready to explode higher here at this time. We are looking for buying opportunities here on crude. Now, the only thing we don't know tomorrow is how do we get there. Remember, I can go on and on about how confident I am where we're going to end up tomorrow, but how will we get there? That's the question. We don't know how the bulls are going to get to this 42.77, right? They might make a run at the lows. Okay, don't get me wrong. They could easily make a run at those lows. If we go lower, what are we looking for? Seller failure to buy it back up. Remember, failure patterns. That's the name of the game, right? Looking for seller failure to buy that 41.27 if they make a run at those lows. If they push it higher, this is undoubtedly going to bring in sellers who probably think this is a bearish market, right? So I would expect, I'm looking at you, 42.37. I would expect some sellers to want to take that trade short. I'm going to wait for them to try again, and then that's going to be my clue here to be a buyer. Once we break those sellers up, right? Once we bust the backs of those sellers, once we see those sellers take the bait and we break through, then there's a little bit more room there to buy those pullbacks, right? Buy them dips up to that 42.77. And then remember, we get up to 42.77, now tag, you're it. Where are we going next? We're either going back to 41.27 or the buyers have two shots to get up to 44.27. Probably not going to happen on a Friday. This is crude, though, we're talking about. It wouldn't be the first or the last time it did something that we weren't expecting, right, just under our nose on a Friday. So be aware, this is only a $3 and change move here, right? $2.50 up to that next range rotation. So what you want to see is as we go higher here, up to that 42.77, you're looking for buyers to try twice and fail to sell back to 41.27. If they try once and try twice with some strength, we're then going to tune in there real time tomorrow and make sure we watch the moving average and see how it holds on those pullbacks. So we're definitely bullish up to 42.77. Do not blindly buy this. You're looking for seller failure at the lows, seller failure as we go higher, right? Or buy those dips as we go higher once we break those backs of the sellers above 42.37. Don't forget, be watching this market in real time tomorrow morning. It's going to be an exciting one. Tomorrow should be a good one because we saw a lot of bears just get chopped up this morning on that on the entry chart we used on that in the trade room today. All right, moving forward here to the S&P. Possibly the hardest market of the day tomorrow. I'm giving you a big time heads up on this. This is likely going to confuse a lot of traders tomorrow. Okay, here's what we have. E-mini S&P range bound with a bearish bias. Why would I call this a bearish bias? Well, because look at the direction. We're going into that range. It's a bearish bias, whether you like it or not. I have to resist the temptation to think this is a bullish market right now. If it's bullish, they're going to have to get these bears off their back. It doesn't look like the bulls are getting anywhere right now. And yes, that's how I have to think. I don't care how strong this bullish market has been for the past 2 days. In fact, that's almost a bigger clue. Why aren't we continuing, right? Why aren't we continuing right now? That's definitely going to be something to worry about. So we have a bearish bias going into the day today. Okay, that means traps, right? Bull traps up at the highs to sell that, right? To sell it back down. So let's keep reading here. There's a lot to cover on this S&P, right? A lot to cover on the S&P. Now, 2 days of strong buying pressure. And again, tomorrow we're going to wait to see who takes tomorrow we're going to wait and see who takes control. Today's narrow range has a bearish bias because the bulls didn't even come close to retesting the highs, and this tells us the sellers will likely be waiting for the bulls to try and buy the highs for easy traps. If price pushes lower, there are undoubtedly going to be buyers that want to buy the dip, right? I mean, think about this. We have this big bullish move higher here. There's definitely going to be buyers here that are trying to buy that dip. The big problem on this, again, is that bearish bias. So here's my plan for tomorrow. First of all, if you're a seller, and I've got to give the sellers the, I'm going to say 55-45. See my math on that, right? Yeah. I got an A in math class. I probably got a B minus probably. But the reality is sellers definitely have a slight edge just because of that trading range. So let's play that game. What if price goes higher? What if price goes lower? If price jumps up, you have to remember that high of day is probably where sellers already have their stops. So it'll probably blow right through that high, but this is where all the weak hands are going to be buying that high, right? This is where all the first-time traders got my new trade account, got my new E-Trade on my cell phone, and I'm going to buy that 2090. Okay, those bulls are likely going to get slaughtered buying that 2090. I can't predict the future, but I do know that this is a bearish bias to this range. So the most reliable trade as this goes higher is to sell into those buyer stops, right, as they try to buy that 2090. So once again, if you're a seller and we go higher, look for buyer failure to sell it right back down. I have to think that there are probably some real smart sellers out there with some limit orders just waiting to gobble up these highs right now because they know there are going to be some breakout buyers that just see the bullishness and they're going to blindly buy that high, right? Can't predict anything, but I would expect there to be a lot of sellers that high right now. Hey, and they may blow right through it for all I know, but what I do know is I can anticipate some sellers waiting for it. The second thing is, if you're a seller, sellers on the tape right now, if you're a seller, if we go lower here right now, this is where you got to worry about those blind bullish buyers, right? This is where the buyers are going to try to buy that dip. You're waiting for, and what I would wait for is because this is such a bullish market long term, is wait for those buyers once, twice, give them 2 tries, right? And then sell right in their faces. So now you get a plan here if you're a bear. Really, if you're a bear right now, because of the bullishness overall, and blind bullishness, right? I would definitely call it blind bullishness right now because of those 2 really strong days of runs up here this week. I'd be looking for seller failure. Let them try twice. If you're a seller, look for buyer failure, right? Wait for those buyers to try twice and sell right into their faces, right into their stop losses. What if you're a buyer? If you're a buyer right now, you really got to be, you got to tiptoe around this tomorrow. I really think the buyers could really have the hardest job of everybody tomorrow. First of all, if we go higher, like I said earlier, there's a bearish tone to this, and the last thing you want to do is buy this high right now. So if we go higher, wait for the new high, wait for sellers to try to sell that, right? So what's going to happen is you're going to see that new high, you'll see it pull back. Sellers will try to buy or try to sell the rip here, right? Sellers will try to sell it as it comes back down, and you're going to buy right into their stops. Okay, that's the idea if it goes higher, right? So it runs higher. Do not buy that pullback here. Wait for the seller to try to sell it, and you know where their stops are going to be, and that's where you want to be buying. Okay, again, you're going to have to be patient at that high. Better to be in late with a bullish breakout than to be in early tomorrow, if you want my opinion. Okay, you really want to see those sellers fail. You want to see strength from the buyers if we go higher. If we go if we go lower, this is probably going to be a whole lot easier. If we go lower, now all you're doing is, again, I realize there's some tasty areas down here that you want to buy, but remember, that's the easy right? That's the easy trade. The easy trade on the S&P you should be very suspicious of the easy trade, right? So we run lower, we look for the sellers, right? Give them a couple shots here. You know where their stops are going to be. Let them build up a position to the downside, and then buy right into those stop losses after they try to take that thing lower on the retracement, right? Okay, so buyers wait for price to go up, pull back, right? It's tricky. You got to wait for the sellers to get their teeth into that thing at the high, because you're not going to be able to buy that high without the juice that comes from running stops at those highs. As price goes lower, that's going to be easier. You know sellers will be chasing it. I wouldn't take the first swing, wait for them to try again, and then that's the one you want right there, that second try from those sellers. Again, if I had to guess, this is the market you want to wear your seatbelt, your helmet, and your mouth guard tomorrow, right? Maybe leave an emergency contact number with your loved ones before you go trade in that market tomorrow. It's going to be a challenging one, especially for an OPEX Friday. Remember, that is the S&P, so it will have some options expiring. There will be some analysis paralysis, some sitting on hands tomorrow for the S&P. How about the gold? Gold and euro are relatively similar today. They get a little bit different idea, a little bit different stuff, but basically the same principles are going to apply right now. First of all, on the gold here, I thought we had a plan on this. Let me get this real quickly here. Hold on one second. Okay, perfect. So gold is range bound with a bullish bias this evening, right? Range bound with a bullish bias. We go up into the trading range, not the best trading range in the world, right? We get a double top at the high, no double bottom at the low. It's not the best range we've ever seen, right? So it's a little bit shaky, but that goes away when we see it bounce right off that 1086. So we definitely have a bullish bias into a trading range, range expansions, range expansions, range expansions, range expansions. Now you see them all, right? And again, you can download this chart inside today's download. So bullish bias to that trading range. Next up, second clue, bullish spike and channel. Spike up, channel out. Now this is what makes this really, really interesting. What do we know about these two pieces of the puzzle? Oh, and one more thing, a bull channel on here, which is really at this stage, it's kind of a guesstimate at this point. It's really a phantom channel. It requires multiple days. It really doesn't have as much value because of that trading range. Okay, we're definitely bullish. We're looking for seller failure because it's a range. Remember, range-bound markets, the path of least resistance, catching traders on the wrong side of the market. That's the most important thing to remember if you're going to be a buyer right now, right? Seller failure. So, couple things. First of all, talk about that channel rotation, right? Channel rotation. High, low to high, high to low, right? Low to high, high to low. So we're expecting price to go down a little bit further before we push back higher. Second thing here, spike and channel. Spike up, channel up. Look where the base of the channel is. Right there at 1078, 1077.6. Guys, this is what we know about a spike and channel. Spike up, channel up, price channels. We know that the correction typically comes back to the beginning of the channel. That's exactly where we just bounced. So as of right now, the bulls have it. And remember, this becomes an A, B, C, D push higher, right, if they hold it. Now, also remember about a spiking channel is that if we can't hold this level, where do we go next? We tumble all the way to the beginning of the spike. So there are really two very important components to a spiking channel. The first one is where the base of the channel begins. The second one is where the beginning of the spike begins. You get the correction back to the base of the channel. The failure takes you back to the beginning of the spike. And again, don't forget, this becomes one big measured move if it holds where it's at right now. Now that we know that spiking channel is telling us, the third and final piece of this puzzle is the range. And the range, like I said before, is really going to be your most important clue. What do we know about ranges? We know there's a bias, bullish bias, state of the buy side. And what's the easiest way to be a buyer in a range environment? Seller failures, catch traders on the wrong side of the market. If you don't know what failures look like, let me know. I'll teach it to you gladly. We'll be doing it tomorrow in the trade room. And we know range rotation, right? Range rotation. Remember that tag you're it? High to low, low to high. We didn't rotate lower. We blow right through it. We go up to the next range rotation, up at 1086. That means now we rotate lower. Now we're balanced inside the range above. We expect range rotation, range rotation, range rotation inside this range now. Now, what that means is that the next thing that should happen is we should go to 1086, right? We should see gold get to 1086 overnight. If they don't get to 86 overnight, now why 86? Because we successfully tested the 86 now. So now we've rotated up into another balance area. So we should see price rotate higher. If we don't rotate back to that 1086, that means we're likely now to fail and run down to 1069.2, right? That's where we're likely to go next. Then at that low, then we're likely to rotate back up, right? And range rotation from there. So as you can see, not the easiest plan in the world, but we definitely want to stay to the bull side right now because of that bullish spike in channel, unless they fail to get to 86. If we fail to rotate to 86, give them 2 tries to get there, right? That's the 2-try rule. We should see the buyers get this price at 1086. If they do, then we rotate inside of this range. If we don't, if we try once, we try twice, and we just can't get to 86, the pendulum now is going to swing all the way back down. It's also going to play into this spike in channel failure, which sends us back to the base, right, where the spike began. As long as we can get to 1069, right? So again, we fail to go to 1086. We tumble back to 69.2. If we get it, then we rotate inside that range. If we can't get to 69.2, that's a failure of rotation, and we slam back higher, gunning for 86.0. Like I've said all week, range rotation, trading ranges are the most important thing, and this is by far the most challenging environment to be trading. But like I always say, at the end of the day, once you learn how to use trading ranges and range rotation, nothing can stop you. Nothing can stop you. Okay? We watch this market tomorrow morning in our chat room and in our trade room on the gold. Euro now, very, very similar. Right? Euro, very, very similar. Euro has a little bit more bearishness to it just because it has a few more layers of resistance it's lining up with right now. So Euro is also range bound with a bullish bias this evening, along with an interesting bull channel that gives us some easy clues as to where the smart buyers will be looking for the best opportunities tomorrow. We have measured moves higher today, which tells us the bears are likely to take this price lower before it goes higher. Combine that with the range rotation and bull channel rotation along with that overshoot, and we would love to see some buying opportunities down around these areas of interest, right, tomorrow morning. First of all, measured moves, major measured move, 1, 2, 3 up, right? Minor measured moves, 1, 2, 3, up. Measured correction. 1, 2, 3, down. Okay, measured moves look good. Channels here right now. Channel rotation. Low to high to low, low to high to low, low to high, right? And we get an overshoot. That overshoot of that channel tells us they dipped a little bit too much into the bullish cookie jar, and it will probably swing to an overshoot of the low. So the overshoot of the bull channel high tells me expect the pendulum to swing to an overshoot of the channel low. Now look at the range. I've got my bullish bias to my trading range. Tag your it, down to the low. Tag your it, up to the high. Tag your it, down to the low. Tag your it, up to the high. Uh-oh, they failed to rotate lower. What happens? Pendulum swings, right? Sellers couldn't get the job done. Where's it going to go? It's going to run to the next range. 0761. We reach the next range expansion. Now we find new balance. We're now balanced inside this range from 0761 to 0716. You guessed it. Range rotation lower, range rotation higher, lower, higher, right? Now we rotate inside that range. Remember though, if we don't get to 0716, pendulum will swing. We'll make a run for 0806. If we make it to 07116, our objective is to get to 0761, right? If we don't get to 0761, right? So looking to get down to that 0716, then up to that 0761. If we don't get to 0761, give them a few tries, then we make the run down. That's where it gets fun. Now we've got stops hanging out below these lows, stop run area of interest, range area of interest, right? And away we go. So most important thing right now is going to be range rotation on the euro. Bullish bias, measured correction. I would love to be able to see some seller failure in these areas of interest because that's where we can anticipate a lot of the bulls that already are in these positions right now. We have to assume there's a lot of bulls that are already in these moves. Their stops are going to be priority here for these sellers before this thing goes higher here. So again, range rotation, we should rotate lower to 0716, then look for a failure to rotate up to 0761. That'll send price lower. Seller failure, right, to buy it back up. Don't forget, if we do get down to that 0671, then we're back inside that range again to tomorrow. Guys, again, challenging markets this week, but they're all range-bound markets. And again, from the initial point of view, it looks like these are the most difficult, but the most important thing for range-bound environments right now is wait for that range rotation, give them 2 tries to get the rotation done, and when they fail, that's when your biggest opportunities are going to be presenting themselves. Bullish bias on the euro right now. Wait for that measured correction. Paying attention to that rotation for tomorrow. Also, same thing on the gold. Gold is a little bit more difficult than the euro because the gold, we have that spike in channel, and we know we're going to have some significant support there at 77.6. Both gold and euro, we have bullish biases until proven otherwise. And then, of course, I would say probably the most challenging market of all of them is going to be the S&P. Be very careful if you're a buyer right now. Seller failure is the only way I'm willing to be a buyer right now on this S&P unless we see this thing just take off through this high and have conviction going higher. But again, I don't think it's going to happen. I'll wait and see tomorrow like the rest of us. And then on the crude, again, we know what the objective is, back to 42.77. What we don't know is how we get there, right? Seller failure is the name of the game tomorrow on the black gold and the CL. Don't forget, no major news tomorrow, right? Tomorrow's going to be one of those days where we may see some very light volume. It's a third Friday of the month. It's an OPEX month. And of course, it's a Friday. So get to it early, get out of it early tomorrow. And as always, don't forget, if you got some free time here, head over to schooloftrade.com. We get the best free trial in the business, guys. Grab your free trial on our website. Okay, make sure you verify your email address when you register for the trial that we can get access to all that is our free trial. And of course, we've got 3 levels of membership. You can learn more about those membership levels on our homepage And we're always standing by 24/7, 365 to give you guys a hand. What a great week we've had this week. Don't forget, send me some feedback. My email address is jj@schooloftrade.com. Share this information with a friend. I would love a thumbs up on the YouTube video as well. If you like what you saw this week, I hope you learned something. I hope you earned something. Now, tomorrow's a Friday. Early in, early out. Don't get caught holding the bag too late tomorrow morning. And the next newsletter will be next Monday evening at 8 p.m. Eastern Time. My name is Joseph. You guys be well out there. Enjoy your weekend. If I don't see you tomorrow morning, Trade Room opens up at 8 a.m. I'll see you guys next time. Adios, amigos. Bye-bye for now.